Sonipat is absolutely booming right now. So today, we're going to unpack the story behind it all, the government plans, the huge infrastructure projects, and what it all means for you as an investor. We'll show you exactly where the real opportunities are hiding.
Sitting right there in Delhi's shadow, Sonipat isn't just growing, it's being completely re-engineered from the ground up. And this isn't some random, chaotic expansion. No, there's a massive government blueprint that is meticulously guiding its rise into a major hub for the entire national capital region. But with all this buzz, all this talk, how do you separate the real solid opportunity from just pure hype? That's what we're here to do. Let's break it down and find out where the smart money is really going. Okay, so it all starts with the official government strategy. It's called the Sonipat Master Plan 2031. Think of this as the architectural drawing for the entire city's future. It's the playbook. And the scale we're talking about here is just staggering. Over 20,000 hectares, that's a huge amount of land, has been set aside for new housing, for industry, and for commercial zones. This is the very foundation for a brand new major urban center. And here's how that land is being carved up. You can see it's a really balanced mix. Now, residential space is obviously the biggest piece of the pie, but look at the huge chunks set aside for integrated townships and commercial hubs. This whole thing is designed to support a future population of 2.5 million people.
Look, a master plan is just paper without connectivity, right? What makes this whole thing real are the massive new infrastructure projects. These are the game changers that are literally shrinking the map and pulling Sonipat closer and closer to Delhi.
So first up is the Regional Rapid Transit System, the RRTS. This is a high-speed train that's going to connect Delhi, Sonipat, and Panipat, and it's going to slash commute times. What used to be a long haul is about to become an easy daily commute. And the new rail lines don't stop there. The Delhi Metro's famous Yellow Line is officially being extended to Sonipat. This is absolutely critical. It plugs the city directly into the capital's massive public transit network. Okay, so that's the trains. On the road, connectivity is also getting a major upgrade. Big improvements to the KMP Expressway and the brand new Panipat-Dabwali Expressway are turning Sonipat into a powerhouse for industry and logistics in the whole region. All right, so we've got the plan, we've got the infrastructure, it all makes sense. The big question is, how does an investor with a budget of, say, under 1 crore actually get in on this? Let's look at your entry points. This table here breaks down your 3 main options pretty clearly. Plotted developments, they offer steady growth, right? We're talking an expected 8 to 12% compound annual growth rate. Then you have independent floors, which give you rental income or yield, plus the value of the property goes up. And finally, agricultural land. That's your high-risk, high-reward bet. Just notice how the time you need to hold on to them and the potential returns are really different for each one. For a lot of investors, plotted development is the ideal way in. It's pretty simple. Land is a stable asset, it doesn't really depreciate, and unlike a flat in a big tower, a plot of land is often much easier to sell later on, which makes it a really solid choice for growing your capital. So what exactly are independent floors? Well, imagine owning an entire floor of a low-rise building. These things can be rental powerhouses. Why? Because they attract everyone, from university students to factory managers to families looking for a bit more space just outside of crowded Delhi. And then you have agricultural land. Now, the price to get in is lower, and the potential upside is absolutely huge if that land gets rezoned for development down the line. But you have to be really clear about this. This is a long-term game. It takes a ton of patience, and you have to do your homework on things like land titles and road access. All right, so we've covered the big picture and the main investment options. Now, let's put it all together into a smart playbook, one that's designed to balance safety and really maximize your returns. So, here's a proven strategy. First, you build your foundation. Put about 60 to 70 lakhs into a licensed plotted development for that safe, steady growth. Then, you take your shot at the bigger returns. Use that remaining 30 to 40 lakhs for a higher risk, higher reward play, like agricultural land. It's a strategy that perfectly balances security with that exciting upside potential. But knowing what to buy is only half the battle. You absolutely need to know what to avoid. So let's look at the common traps that can completely derail an investment. You have to steer clear of these pitfalls. That high-rise apartment with no one actually renting there? That's a major red flag. Studio apartments, they can be really tough to sell when you want to exit. Those small shops in dead, empty malls, they're just value traps.
And finally, if someone is selling you a future city project that isn't backed by the official master plan, you need to be extremely cautious. So, there you have it. The government's master plan is in place. The massive infrastructure projects are already underway. You've seen the investment options. The question really isn't if Sonipat will transform, but when. You'll see today's potential turn into tomorrow's real profits.